hello everyone. This is your host, Akil Jabbar, and welcome back to another episode of SaaS District. In today's episode, we'll be talking about how our guest acquired and grew a portfolio of 8 SaaS companies. Today, we have our guest, Sujan Patel, joining us. Sujan is a data-driven marketer and entrepreneur and the co-founder of Mailshake, where they help people have more conversations, qualify more leads, and close more deals through email. Sujan is also the managing partner at Ramp Ventures, where he manages those 8 SaaS companies, including Mailshake, Vala Norbert, Right Inbox, ZoomShift, among several others. As a veteran SaaS marketing leader with over 15 years experience, Sujan has helped hundreds of companies from emerging startups to Fortune 500 leaders. He helps them create growth strategies that have generated massive increases in traffic and revenue, and he also does consulting work through his SaaS marketing agency, Web Profits. In his own words, when he's not working, you can find him racing cars or motorcycles. And if you're in Austin, if you look up, you may even see him jumping out of a plane. So welcome, Sujan. Super excited to have you on our show today.
Thank you, man. That's the best intro ever. Thank you.
Appreciate it. So for those who don't know you, and we've had a couple of conversations, so I know a bit about your background, but I saw one quote on your website. We say, "I got schooled on business by trying and failing." So before we get into all your successes, I want to hear about your background on your failed venture. So you mentioned on your website about a failed e-commerce venture, and then you launched an agency which many of you people may know called Single Grain, which was led to an eventual exit in 2013. So if you can share us a little bit about your background, how you began your first entrepreneurial ventures up until today.
Yeah, absolutely. So, again, early 2000s, I launched an e-commerce website for selling car parts, like aftermarket, car parts like exhaust, intakes, and stuff like that. And I went from selling it to my friends offline to online. And this was before the days of Shopify. So I actually had to go build an e-commerce platform. And that was, I learned a lot of lessons. I think I borrowed $5,000 from my dad and got a loan for $5,000. And I was 18 years old, didn't know anything I was doing. And I completely failed at the business part, but I learned about marketing and how to do SEO. That was, I was like 18 and didn't know anything and pretty much, failed miserably at the business side of things. And so I was like, I'm good at marketing. Let me go do consulting and help other people with marketing that have a product or a business that works. And so I just did work on like Elance. See, this is Elance, Odesk merged to be Upwork. And I was the only US Indian on Elance doing marketing, right? And SEO work, right? And I was charging, I was 18, 19, I was charging like $20 an hour. And to me, it was great. This is great money. That's when I got a really taste of entrepreneurship in its working stance, right? I was making, I was in college, I eventually dropped out, but I was in college making, 4, 5, 6 grand a month doing like 3-4 hours of, I would say like 10, 20 hours of work a week, right? Most of which on the weekends. And then I farmed it out to other people. And I was like, oh, this is actually something I could do. And that's when I started Single Grain, started kind of in 2005, failed to get that business to be enough to be supporting me financially. So I took a job and kept kind of some clients. And through this whole process, I pretty much grew that business. Ended up like 4 years of working. So I went from like a senior, like an entry-level person to like learn how to manage teams and manage kind of multi-million-dollar, marketing budgets. And I was like, all right, cool. Screw this whole work thing. I'm just going to go I ended up convincing my job to be my first client at Single Grain and like paying me more than my salary. I don't want to dissect how I did it. Too long of a story, but yeah, eventually took Single Grain from like, one full-time job, to be my first client, 6-figure client to about $3 million in annual revenue. And I made every mistake I could possibly make. I added some business partners, and then eventually exited in 2013. And that was also kind of a mistake of how I exited and all that stuff. There's an earnout, not much cash up front. Anyways, through this whole time, I was actually like, I hated doing agency work, consulting. And the whole time I was launching businesses. We launched like some affiliate sites and, some ad network, like content sites. I tried to launch software, but like I was missing like a product manager or someone like, a dev would always build what I told them to build, not like take that information and then say, oh, let me build a solution around the problem you're identifying that would literally solve my problem, which is a mistake. And we never got product market fit. I've wasted the whole time I did single grain over the course of like 8-9 years. I probably spent, 30% of the revenue every year, or 30% of profits, like across the life of that business on failed ideas, on ideas that eventually failed. And I learned, I was like, that didn't work. That didn't work. That didn't work. Don't do that. Oh, that worked. Right. And I kind of just like did that. And all along the way, my agency was growing and it was working. And I work with like really big name clients now, like Airbnb, Warby Parker, LinkedIn, SlideShare and LinkedIn, because SlideShare got sold to LinkedIn. I don't know, like almost every single property Intuit owns. And yeah, and many more. So anyways, but at that time, I was like, Airbnb seems like this shitty little startup that I don't see this as a viable business. They're raising so much money. Luckily, I got some shares in it. And now I think they're about to go IPO. It's going to be amazing. I'm going to actually make a decent amount of money, way more than I could have charged them. So it's good. But anyways, but I failed at single grain too, because I kind of wasn't able to build that to be a profit. It didn't have great profit operationally. It was inefficient. I was the single biggest bottleneck and I managed like 25 people. And so, yeah, and then I went into SaaS. And then why I went to SaaS is, well, I wanted to do SaaS. And why I went into SaaS is out of all the clients and all the types of businesses we work with, e-commerce, SaaS, content sites, publishers, physical products, pharmaceutical companies, you name it. I was like, SaaS seems like the most tech growing industry. They're very profitable. They're growing. It's hiring developers are cheaper than like building a physical product, or your e-commerce seems like the margins are so thin. So anyways, I was like, I want to go learn. I'm going to go build a SaaS company. I didn't know anything about building a SaaS company outside of my failures, which didn't teach me that much on the SaaS front. So I took a job with one of my clients when I work, and for 2 years, I parked myself and learned everything outside of marketing, so hiring developers, building product and product feedback, product market fit, operating SaaS company, like hiring support people, hiring sales people, what the cogs are, the finances and all that stuff. And I was going to park myself there for 5 years and say, I'm just going to go along with the ride and take a break from entrepreneurship. 6 months in, I got bored and started Mailshake. I was like, oh, let me just like practice. I don't know if it's a good idea. Let's just practice. This Mailshake is our biggest company, our largest ones in terms of our portfolio. And along the way of trying to get product market fit with Mailshake, which took product market fit at Mailshake took 2 years, because we pivoted from some other idea. I started buying companies with my now business partner, Bob Senoff, and we're like, building companies sucks. It takes forever to get the product market fit. Let's just buy them when they get the product market fit, and we think there's an opportunity to scale them. So my background is marketing. So I was like, hey, I think I can grow companies better than I can build them. And so along the way, we bought a couple. I think we bought two with our own money. And then I bought a few more with outside capital, and 2 of which we built. So in total, Round Ventures has owned and operated about 10, 11 companies now. We currently operate, we had 8, and now we're kind of selling or automating to really actively manage 3.
Makes sense. So before we kind of get into those portfolio companies, I want to rewind a little bit on that agency conversation, because I think that's a conversation a lot of people think about when they're launching companies. Should I go the agency route? And I'm sure, that it was grueling because it is difficult. And you see that route where a lot of people go from agency to SaaS because they realize they don't want to be managing all these clients and the amount of work it takes versus just building a product once and iterating on that. Looking back now, would you still suggest somebody to go down that agency route, maybe build an agency, learn that, or should they just go dive in directly into SaaS?
Yeah, I think I think what I learned the hard way, and also just what I learned from marketing multiple different properties, is invaluable, right? I think that is such a good skill set. Like I can go, and this is not from like me buying companies. This has come from like my 10 years of doing working at a matrix organization or agencies is that I can look at any property and like within like an hour, I can kind of spitball 2 or 3 really good ideas to grow it, right?
Mm.
Not knowing everything about the business. It's almost like a management consultant style. They can, from an outside perspective, and because they have an outside perspective, they can see the holes and gaps in your business. And now, like in 1 hour, I won't come with the best strategy in the world. They'll just be good leading indicators of what should be done. And so that's a skill set, I'd say, that helps me in buying companies because I look at like 40, 50 deals a month. The other thing I got from this, and this is a superpower, I would say this is my superpower, is my ability to scale, to switch gears from like one company to another, right? Like from 9 a.m. to 10 a.m. today, I talked about Mailshake. From 10 to before this, I talked about Zoom Shift. And it was like, they're pretty like in the weeds conversations. And I could switch gears like almost in like a minute, just like turn to the other thing. Because I worked on so many agency clients that like I'd have to go from one client to the other, and working at matrix organizations where one marketing team support multiple brands and companies. So I'd have to like go in one meeting, talk about the 2021 strategy for like XYZ company. And then so another one and like, here's the way we're going to spend $5 million next year on growing this company. And they're like pretty big, like weight on your shoulders conversations because I was leading marketing, but I don't know, I was able to do it. And I just did it for so long and I probably did a bad job, but now I'd say I'm doing a better job.
Right. Yeah. And I guess it's the same concept, right? When you're leading a lot of projects at an agency. So yeah, that's something I will suggest too, is like, there is a lot of value in whether working at an agency, building your own agency, or even working at a startup. I think you've done all three of those. And I think, yeah, now you can take that and now apply it to bigger things, right? Yeah.
Absolutely. Yeah. You can't really replace the grind, right? You can't really replace the experience you get from working for someone. And the reason I say I think that's really valuable, or an agency, is like, okay, so you could be amazing at whatever skill set you have, but you're not amazing at the rest of the part. Like you can't default just like, I know how to run a business, every aspect of it, right? So if you work at an agency, you only have to work at the aspect that you might be good at, right? And then like the other part's working. Like when I worked and did marketing for Airbnb or LinkedIn, they had their shit together on the whole part of their business. Sure, they change business models and strategies and blah, blah, blah all the time, like over years and years, but they had their core business working. I don't have to worry about like, hey, is LinkedIn like, people are going to like just stop using it randomly? I think if I were to go start my own SaaS company, I have to do the marketing and the growth and try to figure out all the other aspects of it. And to do that for the first time, it's fucking hard. Like that's too many variables. So remove variables and get the experience.
Makes sense. So now you have a total of 8 companies in your portfolio with Ramp Ventures. Some of them you said you acquired, some you started. Looking back now at some of the deals you've done, I think look backs are pretty important. What would you say has been the best acquisition specifically, both from I'll say financial and personal gain? And why? Because I think sometimes the financial gain might be there, but it's just so draining and maybe not worthwhile. So looking back, what was been kind of the best investments you've seen?
Yeah, I think Voila Norbert was probably the best investment we've done so far. It was on the smaller end. I think we bought it doing like 7-8K in revenue a month, and we've grown it quite substantially with a high profit. Like I think we're like 70% margins, like net profit to the partners. After all marketing, all the support operations, and the dev server costs. I think it was like from if I look at my RRR, like my total return from the business, it's going to be great, but not amazing, not life changing. But I'm in the business of like chip away at like getting to the next level. So I think this gets me a big chip forward and is a good success. Don't get me wrong. I've done plenty of deals that didn't work out. And in fact, like Norbert bought another company, kind of a distressed property, and that was a horrible idea. And that's going to that hurt the business so much from a time and suck perspective that, unfortunately, it killed momentum and drained energy beyond, I don't know, it was a distressed property. We bought it for very cheap. I would pay the person that much not to have to go back and think about that business again.
So would you say that's like your worst deal you've done? And looking back then, what would you have done differently and how you approach that? Like looking at, was there something you could have caught and found that, you found later on at this point?
I think I don't think that was a bad deal. I think what was wrong with it was distressed and it was small revenue. And it was just, so I think the couple pieces that were wrong with it was that there was a single large customer was responsible for most of the revenue. Other than that, it was a fairly small deal. Mm-hmm. And I think we did the best to structure. I think given that, I would have said I should have walked away because that doesn't fit the bill of what we need to do. Is too much risk on one thing. So we're like, you know what? Let's buy it anyways. We can roll it in. It's similar. It's a competitor to our company. No big deal. We can absorb it. And it is a big deal because we could not absorb it efficiently. And the problem is when that one big customer inevitably, guess what, left, right? Who would have thought? Well, then we didn't have enough revenue to support what needed to be done to fix it. And so we sucked away profits from another successful business and our dev team from another business to this to make it work. And that was just, again, I would say a year of like just some bad things. And then some wrong going good money after bad, right? Because what could we have done with our main business, Norbert, and to grow it on the dev and marketing perspective if we didn't get sucked into this like opportunistic buy, right? Now,
makes sense.
Grass is always green. I mean, not grass. Like hindsight is always, 2020. But I think the writing was on the wall of like, okay, it's distressed. It's decreasing drastically. Revenue minus big customers, not significant. And it's like, am I willing to put the work in? But I would say the worst deal we've done is, and I won't say the name, but it's a Gmail extension. You can figure out the 2 and 2. And
okay.
This is a successful company. It's growing. Well, now it's growing, but we bought a business of which the core feature Gmail made for free a year after we bought it, 9 months after we bought it, actually. And then they made this and within that 9 months, 3 months in, they made one secondary feature for free. So like we literally, by the way, so we had a gut feeling that Google's going to make these things free. Where they could compete and they likely will. So our first order of business is we need to change the value prop, expand the value prop from 1 or 2 features. The features are send later, right? Now Google, you can schedule an email to be sent. A little different, and I would say Google's Gmails, I would never say this about most of Google products, but their UX is actually shittier than like ours or like competitors because I don't know, it feels like they just kind of strapped it on. But anyways, my point is in that 9 months, we actually built like 8 other features that are differentiated factors, but I underestimated what happens when Gmail or Google launches a product. We just got a punch in the face and a kick to the nuts in marketing when Gmail launched anything. So what happened was not that the product value changed because we built all this other stuff. It was that our marketing just tanked because all these articles, we had all this rankings and traffic and all these people were talking about us. This is an 8-9-year-old business that's been around. It has 250,000 installs. Like you can't, and it gets like 10-15,000 installs per month. Like that's a big number. I felt like that was a moat around the brand and like it was coming from SEO. Well, guess what? SEO, just like the SERPs changed and all the articles now are like all these PR, all these publications talking about Gmail's new feature. And so their authority just trumped ours. And so again, like the rug got pulled underneath us of like our traffic. And so that happened in, I think, April 2019. And since then, we've been trying to recover from there. I believe the core business is still good, but when you just get the rug pulled out underneath you from a marketing perspective and have to rebuild from the ground up, which again, it took us like, I think October 1st, 2020. So a year and a half later is finally when we like figured out how to grow the business. So like a month ago, how to grow the business with a new different marketing engine, right? Not that it's working the same way, but now we have upward trajectory again. So we had this like, and by the way, so like the Google product release didn't actually hurt us from a product perspective. People still wanted to actually use us even before we launched the free like new features. It was that the marketing rug got pulled underneath us. And that was something I got blindsided by. And to be honest, as a marketer, that's shame on me. That should be like an obvious thing, right? I did not look at the market properly to see the inherent risk and all the risks that could come from it, like all the damage. And I would say we are recovering from that deal, and we're back on an upward trajectory. But man, like a year and a half, and combine that same exact year and a half with one of the years of that year and a half was dealing with the other bad property we bought. So it was like 2 years at one time. It was like just chop off both my legs in momentum, right?
Of course.
Yeah.
Makes sense. So the Google effect is a real thing, right? So you mentioned two things. So one is, the one was more historical. Looking back, you saw the distressed asset. You saw one client representing a lot of things. So you could have accounted for that risk, possibly, right? And maybe thought of that as on your acquisition strategy and say, okay, this is just too risky and move on. And then the other one was, this was an upward trajectory. Things are looking good. And there was a possibility of Google releasing. So it's kind of hard because you have to forward think and make some kind of market judgment, which is a different skill, right? And I mean, I think you made, maybe a better decision there, but unfortunately, Google came in, right? And made that move.
And we did de-risk it. I think we de-risked the deal with the one large customer by doing an earn-out and like
exactly.
We did the deal to like, well, we're not financially liable, but what we didn't figure out, what we should have done is walked away. It was like the risk factor was too high, or we should have we didn't factor in not just the risk. We did factor in like the drain. Like we didn't factor in the time factor when that happened, not if it happened, right? So financially we're fine. Financially it's fine. But time is more. Now I have 3 kids. I can tell you I have more money than time, right? I literally have to schedule when I can go to the bathroom, right? When my kids are at home with my wife and I. It's hard, right? 3 babies and stuff. So like it's a crazy crapshoot at my house. But anyways, time is more valuable than money, and that time waste or suck helped us. Made us lose momentum in buying new companies. Otherwise, that 8 could have been 15 or 20 by now, or another company would have been more successful.
Quick question on that: how much revenue did that account for the entire revenue? Would you say that one client
of that company or the portfolio? Yeah. That one company was like 80% of revenue.
80%. Okay, yeah. Okay.
Textbook run away from this. Like PE and any PE guy would be like, or girl person would be like, nope, this is bad, right?
Yeah.
But we're like, we're in the business of making bad work, right?
Exactly. So. Yeah. We usually look at like 30, and I feel that's high, but yeah, fair enough. So from my understanding, there's that focus now, right? You've decided to restructure your portfolio. I think we chatted a few months ago, you were actively looking for deals. And then I think like a month or 2 ago, 3 babies later, you're like, yeah, I'm selling off all my assets, deciding to focus on these 2-3 core high growth SaaS companies, Mailshake, ZoomShift. What was that decision-making process to make that move and just focus on these now few businesses and why?
Yeah, so to be clear, I actually am still looking for deals, but the deals, the value of the deals have to be like, my bar is like 10x higher than it was 6 months ago. And the deal has to be, the company has to be doing 2 million minimum with potential to be doing $100 million, $50 to $100 million exit. So
fair enough.
let's just say,
10,
like
10,
it
15,
needs to go
10,
from,
15, yeah.
it needs to have potential to get to 10 to 20 million in ARR.
Exactly.
Otherwise, I don't even care. And the reason I don't care is along the same time I was doing the parallel track of Ramp Ventures, which started in 2015 to now, we had this company that in 2015 was nothing, Mailshake, and it became the path to, I see a clear path to $100 million exit value here. We see Zoom Shift that we bought in 2020, like Jan 1, 2020, have potential for probably somewhere between 20 to 100 million exit. I don't know. Somewhere between that. It's two. We'll see how it shakes out. But even on the bottom end, that's good. And then we've got like Norbert, which I think has our largest competitor, Zoom Info, $1 billion IPO. Only like the best IPO of 2020, I would say, and tech, whatever. Maybe I'm a little biased, but so like we found these like industries that like, wow, we actually have some really big TAMs and big potential. Why? And Right Inbox is a great one too. Our competitors like Square Boomerang are doing north of 10 million. So the thing is, I look at, like, I get a new deal. It's just going to bring in so what money and so, like, be a distraction. And, the smart money goes after, like, if I were to do this again, I wouldn't do this. But if I was smarter, I would just go focus on Mailchimp, right? And just do nothing else. But you can't make that decision in isolation, because by the time I figured out Mailshake was a winner, it was late 2017, and I'd already bought two companies. I'd already bought Right Inbox and Voila Norbert. So I'm already in those deals. And I look at buying a company as you've got a job for 5 years, whether you want it or not, whether you get paid for it or not. You got to make your money, the capital you receive or the deal work, and you're financially responsible, not necessarily responsible, but like it is you as a business owner, it is your obligation to the investors, the shareholders, essentially, to do everything you can to make a deal successful.
Exactly. And I mean, that's a little bit opposite approach than traditional investment firms, right? Maybe they look to continue to grow by doing, more acquisitions, having more assets under management. Looking back now, would you still have done all of those 8 deals? Or somebody who's trying to get into the space, do their first few acquisitions, do you suggest on, focus on a fewer number of deals, say 1 per year, and have higher upside, or just do as many deals as possible and, as long as they're decent?
I haven't seen very many people be successful doing volume of deals and small. And I think you could end up with many properties, but you have to think about how you're going to operate them. So Ramp Ventures kind of model is we operate them, myself and Bob operate them. Like we are fractional CEOs, right? CMOs or whatever, right? But, for a small, let's say $1 million ARR company, you don't really need a CEO. You just you need to be clear on the direction, right? And then it's like pretty clear at these small stages, right? But yeah, and so other operators have they hire CEO, they build a team internally, and so we didn't do that, and so we already knew that our time, the way we're doing it, we were never going to be able to do a volume of deals. We can do 3 to 4 deals at a time, and we have to let go of one to get another, and let go of one to get another, and I like that. So I intentionally, and maybe this is a little egotistic, but I intentionally wanted to do it that way because I didn't think people can run or grow a company better than I could, given I just did it when I work. I'd done it at Mailshake. I'd done it for all these companies are buying, and I have a background in marketing these companies. And so no, I don't think we're going to find operators who are going to do it better than we can. Let's just find companies who can help us, who we can do this for and make more and more every time we buy a new company. So it was a force function. It was a limiting factor to have a force function of you cannot do more than 4 deals. It's just not timely. You just don't have enough time in the day. So we So we didn't, right? And when we did, the one time where we owned, like we added one more property than we could handle. Oh man, like we were just all miserable, like every day for like 6 months or a year until like we kind of got rid of a company or like sorted through like the absorption of the company. Because it's the first 6 months of the deal is always the most time consuming.
Yeah, exactly.
Yeah. And getting everything in place and understanding the business and all that stuff. So we can only do 1 to 2 deals a year. And I only want to do like maybe one deal every couple of years.
And why not? So we had this conversation before, like why not put somebody, like one of those high profit ones, like, Val and Norbert, why not just hire a manager to take over it and, still reap the upside and cash flow. And, then it doesn't take too much of your attention and you can focus on it rather than selling it.
Yeah, it's a way to do it. I think, I go back to like, I don't know folks that could do it better than I would do it. And I have a fundamental problem of not doing it the best way possible.
Fair
right?
enough.
And so I'd rather just sell it than like give it to someone else to like do something with it. Now, don't get me wrong. These are companies at like sub $2 million CEOs. Very different skill set than hiring a real CEO, right?
Sure.
Like,
yeah,
I can go like a real CEO, a company that has potential to be tens of millions of dollars. I have no problem hiring those folks all day long. I mean, to find the right company to fit them in there and,
sure.
but I'm saying that, like, I feel like the sub $2 million ARR companies, which we have a lot of, excluding a few companies that we own in the 8, they require, it's more like a growth hacker CEO, right?
Exactly.
And
yeah.
I just don't jive with that. And it's like the risk factor of a growth hacker CEO is, what if they just did it wrong? What if they don't know any better? Like, I'm just like, I hate to like sit on the sideline and see someone succeed or fail and know 4 or 5 other ways to do it. I consider myself a coach more than like a manager for my team now, shaking others. I do like kind of coaching folks and doing it, but I think the jack of all trades kind of skill set, the companies are a little too big for, but they're too small for like a real CEO and a marketing team and like a whole full-fledged team, right? There's like this medium space that I think it requires, in my opinion, to grow the fastest and make the most from that deal. It requires to be the savviest, right? It requires an edge. Like, what is my edge in growing my company versus another, like all my competitors?
Right.
I'm better at it or like whatever. And I don't feel like the CEO or place would have that same edge.
Yeah, unless they were successful in a similar industry or business, and right, like it takes a lot of things to.
And we were already, by the time we wanted to do that, we were already in the deals, right? What I would do in the future if I wanted to bring a CEO on, I would structure them with equity, right?
Yeah.
Give them a portion of equity, but we didn't structure our deal that way, and so like I didn't want to redo it all to bring a person on that I wasn't 100% sure on.
Makes sense. Now, when you're looking at, so you mentioned, $2 million as a floor in terms of size. When you're looking at a potential acquisition target, right now, when you look at a business, if you can, break it down to one factor or element that really gets you excited about the opportunity, what would you say that is?
Is the business like is the product? So I'm only doing B2B SaaS. Is the product like actually? It's just the product. Elements of the product. It isn't even one factor. It's like, what's the product? And is this a must-have or a nice-to-have? I don't care about competitors. Like every one of my businesses, well, first of all, the SaaS space is way competitive, right? Like there's just too many. There's so many people. So like competition, that's fun, cool. Like that's actually good sign that there's a market here. But I think I'm not worried about like having 20, 30. Mailshake has 82 competitors according to G2, right? Fine. Okay. No big deal. Right. Biggest competitor Outreach, billion. Smallest one, I'm like 10K and MRR. Right. So like, doesn't matter. But what's the product? Like, is it good? Like, do we have to rebuild it? Like, is it core? How do we make it core? Like, what's the potential of this product? If I can analyze a product 10 different ways, which I normally do, it is like I'm buying the product and everything that's kind of been done around it. And in most of our companies, the product is the growth engine. Marketing is fuel. Sales is like rocket fuel, but the engine is still the product. And with a shitty engine, after to rebuild it, then you buy the marketing. And that's great too. These days, marketing is more expensive than product, like meaning what it takes to build a product.
Sure.
But you have to be aware, are you buying a marketing engine or are you buying a product? And
yeah, there's a lot of that.
Very different. And I think there's the market, in my mind, the market's shifting to like, it's almost better off buying the marketing because it's less expensive and less timely than building the product. But arguable of the risk factors and I don't know. I wouldn't only invest on the marketing side with the poor product. But like, look at guys like Neil Patel, right? Neil bought Uber Suggest. Freaking good product, but Neil brought his traffic. And Uber Suggest traffic was ridiculous, right? All he had to do was figure out ways to monetize it. And then he like combined it with his traffic, which made it like a huge funnel. And I think he got to pretty good growth, like multi-million in growth, just like monetizing the traffic with the product, right? So those are gems. Those are hidden gems and also situational. But I'm looking for more of that than like a company that is under marketed. And that was kind of our thesis in 2015 is like, we're good at marketing and operating efficiency. We can run it better and we can do a better job growing it than most around. And our thesis and concept now is like, well, look, everybody's doing this. There's lots of companies doing this. What are we really good at? We're really good at growing companies, operating them effectively, building teams. And where do we want to spend our time for the next 5 to 10 years, right? We've already proven out the concept. I'd say 6, even the 2 deals that are bad, we're still up on. Like if we go sell them, they're still worth more or the same than we bought them for. So like, I'd say up being like we made profit along the way. So like net gain, but that's not the way you look at it because there's a time factor too, which means like, did you really want a 30K a year job for 5 years even though you made money, even though you made 100K in 5 years, it's still, anyway. So yeah. Did that answer your question?
It does. Yeah. And I think that's what I love too. When we look at a business is like, you see those founders who are very product focused and they just like, they're those wizards that just love building versus like going out and marketing it. They're scared to market it, but somehow they've grown by one channel, and then you come in and you apply a few more channels and just keep building on the product. Guys, I want to shift gears on the investor side. When you're raising capital, because you've done that with a couple of deals, external capital, what are your top 3 main ingredients to get, would you say, other investors on board to trust you into acquiring and managing a company? Is there something? I know obviously they trust your experience and your background, but is there these 3 things you say, look, this is what this company is doing. This is why you should invest in it?
Yeah. It's really, I don't know if there's 3. I think one is like showing your experience and sharing your experience is number 1. Meaning like I've got people that I email regularly whose money I don't have, but they know everything I'm doing right now. Why? Because I want them to know what I'm doing. If they choose to get involved in our next deal, they can. I'm not required. They're not even a shareholder and all they've done is probably sign an NDA, but they could go and use that information to go buy another company or invest with another partner and whatever. But like,
interesting.
By the time I ask for money, they know who the hell I am, what I've done, what I'm doing today, with the lessons I've learned yesterday, and like what I'm thinking about tomorrow, right? So I think there's that. That's number 1, right? Like if you're going to go get money, build a relationship before you ask for money, right? Show your success before you ask for money, right? That's number 1. I think number 2 is be very, very like provide clear updates. I've invested in probably, 15 angel investments and like at various like seed to Series A.
Mhm.
And I hear from nobody. And this is not just my common theme. This is a common theme for most investors. Unless you're on the board, you don't hear updates. I want to help these people because it's my money. I want to help them be successful. Yet nobody really, actually only one. I'm an equity holder of like a Uber for lawn care company. I can't
Mm.
say the name, but I'll
Mm.
just say that. And they email me every week with updates about their company. And I'm like, I know what they're doing. When I have something valuable I can add, I will add it at that one point. Right? Otherwise, I just
Nice.
shut up and listen. Right.
Nice.
But I know everything they're doing. And like, how much brain power does it for me to know what they're doing every day? It's reading an email, right? Sending their, they have a deck or whatever. Most of it's like an email. Here's what and then they're even smart. They have this is an investor relations email. And they, at the bottom of the email is like, here's how you can help. I'm like, even better. You're telling
Love it.
me you need help here. Great. I do the same thing for my investors. And we've been doing it from day one. And my partner is actually the one who like got me on this bandwagon. Our updates to our investors are like 10 pages every month. It takes me 2 days with my partner every month to write this update. But the thing that so we started doing this for the investor, but what the most value I got out of this was like, oh shit, this is what happened this month. Like when you're in the trees, right?
Mm.
It's hard to see like the whole forest and what's happening. And like, so you kind of get a vision for it. The other part of this is that you get an understanding of the full picture, the paint, you are painting the picture, and then you can eventually step back and like, oh, that was a shitty month, or that was a really productive month, or like, wow, we got our ass handed to us.
Yeah.
The other part of this is when you look at your previous update and you're like, this is what I said I was going to do next month, and this is what I did. There's something different here. And so it's the do-say ratio that I've learned from like Heath and Shaw, like, I don't know, like 10, 15 years ago, of like, hey, here's just saying things you're going to say you're going to do. Here's what actually happened. Did you do that? Now, it's never 1-to-1, but if you're in the 70, 80% range, like that's an amazing place to be at. Sometimes you might, I was going to do this, but like that was a bad idea. And here's why I didn't do it. Right. And so, yeah, I think it's never going to be 1-to-1, but like the closer you can get the like do say ratio to 1-to-1, it kind of matches. It helps you not helps you, but it tells you like how you actually executing and what you're saying you're going to execute on. And I guarantee if you ever look at that in someone's life or business, it like the numbers, unless it's measured, it's under 50%.
Probably. And I think that's another thing when they say setting up your OKRs, right? I think it's the same thing where, you're not expected to hit all 100. If you're doing it, you're probably under committed. But if you're hitting 70 to 80, you're probably at a good point. So probably same thing, right? Doing what you say you'll do sounds easy, but it's harder than in practice.
Right. And then it makes you question what you say, right?
True.
Don't say stuff you don't think you're going to be able to pull off. It's like when you
that's
think
integrity,
about,
right?
When you act, exactly. Like if I say I'm going to do this, well, damn, I'm going to do it, right? Like, and again, like I'd say that's a superpower for me because I've been living my whole life that way. Like I want to go do this, I just go do it, right? I don't know. I think about it, but then I just go do it. Right? My wife hates it because then she can't buy me presents. I was like, I need this, and the next day I did it and bought it, fixed the problem. Like, cool. My signature saying here, and we'll move on. I know there's more here, but is every problem or everything can be solved with 2 books and a conversation, right? Like there's usually 2 good books or blog posts even about it and a conversation with someone smarter than you, like a coach, your mentor, the person you have a problem with, your partner, whatever, your employees, your wife, your husband, whatever, like get information about it and then confront or console or get coached on that situation or problem.
That's actually, very true. Thinking about that makes perfect sense. I love it. So on the investor side, looking at a business from some investors, they look at a business from a high level perspective, right? The market, good metrics team. And then you have others who are, look very, very deep into the details of the business. What is the growth rate by client and product category over the past 5 years, blah, blah. What's your approach to getting, the right enough data to be comfortable while not scaring away the seller away with like a crazy long list of requests that they don't want to get into?
Yeah. I my approach is I ask all my crazy requests and I
Right up
let
front.
them know up front. Well,
Mm.
first decision is, do I even want to go deeper in this, right?
Okay.
What questions do I need to, what are like questions I need to must have solved, right?
Okay. Mm.
And then I go, once I get that threshold, and that's like 2 or 3 questions, right? Your traffic, give me access to analytics, or like, show me this, show me that. Like, it's like 1 or 2 conversations. Simple. Once I get that, and during this process, I'm like, look, I'm going to ask you simple questions. Once I get those answers, I'm just validating what I want to move forward. And I don't want to waste your time. So I'm just going to ask you the things that I think really matter. After that, I'm going to probe your business to eternity and beyond. It is going to suck and lots of questions. You're not going to have any of the answers, you're not even sure I'm going to buy this business. But I tell them, by thinking about these questions, even if I don't buy your business, you're going to be better off because you're going to know the answers to things you probably haven't thought of. I hope to buy your business, but whatever. And sometimes by doing this, like people have like just said, oh shit, I found a way. I think I know what I want to get out of this. Like I've scared away sellers because they got the like, aha, I'm like, damn it. That's too much. But
Yeah.
that's, that's the way I've kind of done it. Yeah, I mean, my angle is also like, I'm a founder too. Like I get asked, if I got asked these questions, it would suck. Yeah. So yeah, that's kind of my approach.
Cool. And so for those who don't understand, maybe can you share, you said those first 6 months are obviously the most critical, take a lot of work to understand the business, but on the marketing side, post-acquisition, what does that generally look like when you acquire the company? What are you doing there to turn it around and grow it?
Yeah, you're trying to find usually there's one growth channel that's sometimes been tapped out. You're trying to identify, well, first I would never buy a business that there's no growth opportunity. So when during the 3 months of closing the deal or 1 month or whatever, you figure out like your 30, 60, 90 day plan. What are the things you need to get done in the first 90 days? It's the same thing. Like come up with a plan, right? What are you going to do over the next 6 months? What is it that you need to accomplish? And I say 90 because like, let's start with the big things you need to get done to make the whole year work, right? And because also in those 90 days, things won't work. You'll find out which won't, right? Like, oh, I thought this channel was big, but it didn't. So it's in getting all the metrics in place, tracking set up. It's understanding the marketing tech stack, what is needed, what tools you need to use. If you're going to add sales, like for example, when we bought Zoom Shift, there was no one doing sales as the founders. I'm like, no, hiring a sales person or team of people. And so we did. And like what tools, we got that infrastructure set up. We needed tracking in place. We need to like, where are the holes? Where are the gaping voids of under-marketed or poorly marketed or poorly marketing execution, or under, right? Or non-existent a lot of times that you can fill. What are the low-hanging fruit? So I'd say a third of this is low-hanging fruit. A third is like infrastructure / understanding what's happening with the funnel and everything like that. So sometimes it's like, I guess most deals I bought, they don't even have good tracking in place or all the things tracked. So it's getting that in place. And so, by the way, that makes it like 1,000 times harder when you're vetting the deal because you're pretty much doing it before you actually buy the business without letting them know. And then the other part of this is like that's a low hanging fruit or kind of like just like opportunistic things you need to get out the door. Right. And unfortunately, 30 to 40% of what you think is going to work usually doesn't.
Yeah. I think that's pretty standard. Yeah.
Yeah. Pretty standard. And putting the people in place. Right. So, without sharing my exact playbook, usually it's sales, usually it's marketing, usually it's support success, something for post customer, usually copywriting expertise is needed, usually design and conversion stuff, like design to do A/B tests and conversion and optimize the funnel. Right. And so I've got my like go to market, go to acquisition team, and some of them stick around permanently.
Nice.
like
Yeah.
full-time employees or full-time contractors. Others,
Mm.
like conversion folks, will move on to another company, or like I may have even borrowed them from another company.
Makes sense. And yeah, and what would you say? So going to where you are today, you obviously had some success. Who would you say, or what has been, would you say the best three resources, whether it's a book, somebody in your life, or a mentor that you would say has been instrumental to help you lead to your success?
Good book called Finish Big, or Built to Sell. Those are
Built to sell.
read them both.
Mm.
It's like a duh type of situation, but like when you're new to this or in the weeds, you're just like, oh, yeah, that makes sense. I think I think so. Those are really good books. I think I like just constantly read everything about SaaS as a whole. Like generally speaking, the leaders, the unicorns, the ones that are like funded companies, the valuations they get, the things like I would recommend reading like Bessemer Ventures kind of content. If they have the Cloud 100, Y Combinator has their thing like Point 0.9. All these VCs, they've got their job is to make their hundreds of millions and billions of dollars invested in the startups, SaaS companies or cloud companies work. Why don't you let them teach you about the market analysis and the industry analysis and learn everything you can, even though that's not what you're going to apply to your usually purchased or acquired companies would be, or companies like us, guys like us who would buy companies won't run in the same way as a funded startup. They're more bootstrap startup operators or operations, but you can still learn a lot. So I think that's like number two. And I think number three is resources. Like just go do stuff. Like you be your own mentor. Like execute. You got an idea, execute, fail, execute, fail, execute. Start some sort of growth experiment. Throw all your ideas on a paper. Most of them are going to suck. A week later, look at that piece of paper and think about this is the impact of each one, and just do the top five, right? Like go do it. So I hate when people are like, I need to learn. Just go do it.
Just do it.
I think that's the only way to learn, especially not the only way. That is the most effective way to learn, because you can talk about it for a while, but most of the time, by the time you're done talking about it, you could have just done it.
Exactly. I love that. Be your own mentor. And I think that's been said in the past before, right? Where if it's not the information, there's a lot of information out there. If everybody actually applied what the information is out there, we'd all be billionaires with, 8-pack abs, and we just have to actually just do it, right? So there's nothing special about it.
Absolutely. Yeah. I mean, like the knowledge of weight loss is fairly out there. Like everybody knows what to do. You eat less than you burn, right? And eventually you lose weight and you go to the gym every day. Well, yeah, no shit. That's easy. Like those are 2 bits of information, but like 24 hours a day to eat less is hard, right? To manage your energy, to take time out of your day to go to the gym is hard. So like action is significantly greater than information, but information without taking action is just fucking noise.
Exactly. So three babies, 8 companies, still continuing to grow. You're doing pretty well. But today, how would you define success? What does it mean to you today?
Yeah, I mean, so, I think I have my still monetary value of measuring it. So money, right? Okay. My goal is to get $10 million into my bank account cash, like not in equity holdings, cash. I'm well on my way there, to the point where I think if I just don't mess up what I'm doing now, I'll get there in the next few years. But now my goal is $100 million in my bank account. So I have like 10x the goal for myself, because I see already there. And that was actually my point. So that's like the monetary success. I think number 2 is like, am I happy? Am I enjoying what I'm doing? Right? Like every day. And if the answer is no, what is it that I'm not enjoying and I have to fix it? I have to fix it within a month or 2. And then also, I think the ultimate success is this balance of life and integration of work-life balance. But like, can I take away a day, any day of the week? I'm just going to say, I'm going to go spend time with my kids. If the answer is no, I am doing something wrong in my day to day. Like I'm too hands-on. So I am a hands-on person in general, but like, yeah, if I'm not able to step away from my business even for a day, no matter what day it is of the week, I'm doing something wrong in the role. I'm in the wrong role.
Yeah, you don't have your true freedom then, right? Yeah.
I'm not an entrepreneur. I have a job.
Exactly. Yeah. That's not what we signed up for. Awesome, Sujan. Appreciate it. Last question. Where can our audience get in touch with you, learn more about what you're working on, and ask any questions they have?
Yeah, I mean, best place, I blog a lot. I blog at a lot of places, but SujanPatel.com, my personal blog. I just share a lot of the things I learn and know. And I'm on a personal mission. So there's a contact form. Get in touch with you there. LinkedIn is great. But like my blog is all about now, as of 2020, only my unique experience and things I have not, that's not out there on the web. So hopefully that's, you'll learn something new there. At least that's a goal.
Awesome. Always nice chatting with you, Sujan. Appreciate you jumping on, sharing that.
Likewise. All right. Take care.
Thank you all for watching this episode and joining SaaS District today. Don't forget to like, subscribe, and hit the bell for future episodes where we interview top leaders in the SaaS industry. If you're a SaaS company looking to grow and unlock the true value of your business, get in touch with us at Horizon Capital, and myself or one of our consultants will provide a free assessment to help you get there and hit your goals. If you have any feedback or suggestions for this podcast, please comment down below and help us improve our content for you all. Thanks again, and see you on the next one.